Hello traders, Gary Wagner here, just about 11:25 in Honolulu, 4:25 in New York. It is Tuesday, 24th day of January, 2017, and this is the Daily Report for Gold and Silver. After reaching a high not seen for the last 2 months in gold when it traded to 12.20 overseas, profit taking did ensue and begin. We did see this market close modestly lower on the day, trading off about $6 when we look at February futures, which is our continuous contract, at 1209.50. The low on the day is 1206.20, and as I said, the high today has been 1220.10. So we did see the market trade dramatically higher, but close under pressure, and that does give us a interesting candlestick pattern that we'll talk about when we pull up our first chart. Now, we also want to look at April because some traders have switched contracts, rolled over from Feb to April. Some are waiting to. Obviously, the move would have been to have sold the current position and then waited a day. But I don't really feel comfortable messing with the way I lift legs, so to speak, when I'm doing a rollover. And I'm simply looking to get as small of a differential between the two as possible without trying to time it, meaning to lift the legs at different points. In other words, selling and then waiting until you buy, because that can work against you as much as it can work for you. But when we look at April gold futures, we are looking at a market which closed off also $6, 12.12. The high on the day has been 12.23 and a low of 12.09.10. So as you can see, roughly a $3 spread between the 2 months, but you are going to see those shrink as February gets closer to expiration, which is literally just around the corner. Silver also trading lower on the day, selling off by about 0.3% at 17.25. This, of course, is continuous contract, meaning March. March is most active. Now, it's traded to a low of 17.05 and a high today of 17.31. So traders, the first chart that I do want to look at on today's show is going to be simply a daily chart, and this one in Japanese average format. I am going to convert it to a standard candlestick chart because from the standard candlestick chart, there is a pretty ominous pattern that is developing. We would need confirmation to act on it, but nonetheless, I do want to point it out to you. So when we look at our Japanese average chart, and Japanese average charts are always by their nature going to lag behind market moves. That's how they filter out the noise in the market. What we can see is that on today's downside move, as I said, about a $6 decline, you get a very smaller body in the candle. You also have the lower and upper wicks. What's important is really the lower wick, not so much the upper wick, because what the lower wick signals, and we've seen it a couple of times over the last 4 trading days, but what this lower wick signals is that at some point during the trading session, it did trade below the midpoint of the prior candle. That's all it's saying. But the fact that it does trade through or to that midpoint of the prior candle is showing you some weakness in the market. And what we can say by looking at this particular chart is that the upside trend that's been so prevalent, now I've gone and blown this up substantially, but that upside move is weakening in terms of steam, and so we could certainly be at the doorstep, so to speak, of that first kind of a dip. We've had a dynamic move as this market has traded off of these recent lows at about 12.23. It's moved up almost $100, and this move today really signaled $100 within this recent rally. So this could be a point in which the market begins to correct. And what I mean by that is I would look for some sort of a minor correction. Of course, we would plot a basic fib retracement from the lows here to the highs here to ascertain where it could actually go to and therefore plan our basic strategy from there. But nonetheless, we're at a point where we certainly want to look very closely how this market trades in overseas trading tonight as well as tomorrow. And so traders, as I spoke about, I have converted this chart to a standard candlestick chart, what we can see when we do that is the basic identification of a simple 2-day pattern, simply called an engulfing bullish. An engulfing bullish has certain criteria to be met, and the major criteria is that it has to occur after a defined uptrend in the market. Well, it certainly met that criteria. First. Secondly, it needs to open above the trading range of the body of the prior day and close below or at the trading range, and we're certainly getting that. Looks like the close is about at, but we certainly opened above. So this is truly an engulfing a bearish pattern. Now, to take that call, we have to have a confirming candle. And on this particular pattern type, and I'm going to have to adjust my color as I speak, but on this particular candle type, that pattern is absolutely essential. And what that pattern would look like, or the confirming candle that would occur, would be that on the following day, meaning tomorrow or trading in overseas trading, we would have to have a continuation of this dramatic selling in which we would see the market form a red candle, and would look something like this with a lower low and a lower high than the previous candle, which was the most recent high. This is that 2-month high right up here. If we got this confirming candle, that would probably signal that it would be time to exit the market and to pull profits on our positions. So traders, you can act accordingly. If you see weakness in the market, you can certainly go and pull profits, but you want to see a development of this kind of a candle before making a move in the market. And traders, as far as silver goes, as you can see, I've pulled up a basic daily chart of silver. There's really not a candlestick pattern that I can identify here, but what I can say is that the precious metals, specifically gold and silver, tend to move in tandem. And what we look at is that when the markets are up, and that's that tandemness, we look at the relationship of which had a greater percentage gain on the day. Markets move down, we typically look for both gold and silver to move down, and we look at percentages. So what I mean to say by that is, if in fact we get that confirming candle in the gold pattern, the engulfing bearish, we're probably going to see the same occurrence in silver, which would mean weaker prices. And I would probably recommend pulling profits in silver also. But let's see how this market reacts. My sense is that we could be looking at a very, very short-term market move. However, if we get a continuation and the Dow goes to 20,000 over the next couple of days, we could see that spill over into safe haven assets being put under pressure. In other markets that we follow, tremendous upside surge in U.S. equities today. Standard & Poor's 500 as well as the Nasdaq closing at new record highs, and the Dow just within striking distance now of that elusive milestone, 20,000 on the Dow Jones Industrial Average. Now, it did kind of sell lower into the close, giving up some of the gains. The high on the day is 19,949. So it came within about 51 points of 20,000, closing at 19,912. So we're still within striking range because the market closed up about 112 points today, about a 0.6% rise. And as you can see, another 100-point day tomorrow would take us above that particular price point. Now, Standard & Poor's, and we're certainly going to want to look at a chart in the S&P today, did close at a new record high of 2280, up almost 0.7%, up about 15 points. And then the tremendous swing that we saw, if I can pull that up, is absolutely the Nasdaq closing up 32 points at 5096. It was just at around 5100 about 10 minutes ago, but as we go into settlement, we can see that this market has taken a little bit of that back, but nonetheless, this is a record close for the Nasdaq. A dollar index actually fairly quiet today. As you can see, we are looking at green on the market, but 100.29. Not any kind of a change that we could define as anything but fractional. So it's fractionally higher to unchanged on the day, sitting at right around 100 on the dollar index. So traders, no doubt, the U.S. equities market's absolutely on fire today. Dow Jones Industrial Average closing up roughly 112 points on the close, 19,912, with an absolute striking distance of 20,000. We can absolutely see 20,000 when we look at this weekly chart. And the fact of the matter is, if you recall, over the last couple of days, I've been talking about, specifically with the Dow, that is, this rounded top that we have identified, the fact that we would typically see prices round, and that would be a great indication of a potential correction in play and lower pricing. However, the fact of the matter is that this market is absolutely fundamentally driven, and steps that President Trump right now is making to really ramp up a business environment has really taken this consolidation period that has been so prevalent in the market. These are weeks then over the last month that we could see a major break to the upside. Now, we certainly saw that in the Standard & Poor's 500. We certainly saw that in the Nasdaq. And the fact of the matter is that this week's market move, really above the rounding top that we have identified, could signal that we are not going to see follow-through selling in the market as we anticipated, and we could see a resurgence of the upside action. We'll certainly know over the next couple of days, because as once again, we are so close to striking distance of 20,000, and my sense is that if we break past that, you would have a lot of triggers in terms of buy and sell orders entering the market, that we really could see some increase in volatility in the market. But today's market move to the upside, it does signal the potential conclusion to this consolidation area that we have been experiencing in equities over the last month to month and a half. And it's easy to see what happened when Trump got elected. That is this candle here. We had this tremendous spike. This was that short-term optimism that we talked about, and this was the realism that as we got close to Trump's inauguration, we wanted more of a wait-and-see attitude. We have waited, and now we are seeing, and he is in fact moving quite quickly and converting promises and pledges into policies. And that's what I believe is at least influencing the U.S. equities markets, if not being the dominant trigger to this most recent rise. And traders, lastly, I do want to look at the Nasdaq today. That has just been on fire. We really, just as we saw kind of the rounded top in the Standard & Poor's market, we certainly never really saw that here. We saw a definitive time of consolidation. We can say that by virtue of these doji candles, very, very small bodied candles. We can certainly say, and this is a daily chart, that we certainly got a sizable breakout closing at a new record high on the Nasdaq. So traders, for right now, some have actually gone ahead and switched into April in terms of their gold positions, and of course we've left silver alone. This most recent sell in the market has definitely got our senses up. We want to look at this market very closely to see if there is any kind of continuation or follow through selling over the next couple of days, because if there is, we certainly want to either raise our stops or simply pull profits on our current trades. And we do have profits on both of our trades right now. So we want to look at this very, very closely, be sensitive to any downside moves so that we can react quickly. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.